Welcome to the Property Profits Real Estate Podcast, the show where real estate investors talk strategy, capital, deals, and growth with your host, Dave Dubeau.
Hello, guys and gals, and welcome back to another episode. Today, zooming in from just outside of Los Angeles, California, we have Brent Sprenkle, who is not only a successful real estate investor in multifamily, but he also helps other people to be very successful real estate investors as well. He works with a brokerage that helps people buy and sell multifamily properties in California. And he's the author of a pretty cool sounding book. It's all about billion-dollar portfolio creation because he's helped some of his clients do exactly that. So Brent, welcome to the show. Great to have you.
Thanks for having me on. Happy to be here today.
I think I probably butchered the title of your book. So what is your book called so people know?
Billion-dollar portfolio.
Nice. That's a nice title, that's for sure. So before we jump right in, Brent, maybe just give us a little overview. When you put on your investor operator hat, what does your portfolio currently consist of in 2026? What kind of properties? Where are they? What size do you like to focus on? That kind of stuff.
My portfolio is entirely of what I'd call mom and pop apartment units. So it's between 5 and 20 units, mostly in the greater Los Angeles area, but we also have buildings in San Diego. So I'd say 2/3 of it is here in central core Los Angeles, and 1/3 of it is in San Diego.
Well, the value of that portfolio is probably the equivalent of some pretty big buildings in other areas because fairly expensive markets that you're in there. Just out of curiosity, how is it working for making those properties cash flow? Are the rents enough that they're cash flowing nicely, or how's it work?
There's obviously been some challenges in the last couple of years. The first has been, as we all know, interest rates have gone up, insurance costs have gone up. Mm-hmm. Just in general, operational expenses across the board are up. Maintenance, repairs, management, everything costs more these days. That's no surprise. But the bigger challenge is in the past, while our costs were going up, rents were also going in the same direction. Now rents have either plateaued or they're on the decline. So it is a lot more difficult to make money right now on what you bought 3 to 5 years ago.
Yeah.
Because not only is your interest rate, your payment to the bank higher if your loan has gone variable, but just all your operational expenses are higher and your rents overall are lower. Mm-hmm. So buildings that used to cash flow like slot machines, they're still cash flowing, but it's not quite as sexy as it used to be.
Not the gush it used to be of cash flow.
Yeah, it's definitely down. I mean, a unit becomes vacant. It used to be a unit would become vacant. It would cost you 20 grand to do a really great renovation, a really great turn. You get $500 more extra a month. So you get all your money back in 3 years. Now it doesn't cost you 20 grand. It's like 30, 35, and you don't get $400 or $500 more a month. You get like 2. Mm-hmm. So it takes you like 10 years to get your money back out of that. And by then that unit's turned 3 times, 4 times, right, and you're spending more money in there. So it's not quite as juicy as it used to be, but everything always changes. And the people who are buying today are buying at drastically lower values because the market's down 30, 40% here in Los Angeles. Wow. So people are buying buildings at $175 a unit. They used to be $250, $275 3 years ago. Sure, the interest rate now is 6%, where it used to be like 2.8. Mm-hmm. But at some point, there should be some reprieve with interest rates, and hopefully we can refinance some of these buildings in the 5% range someday. We have to be optimistic.
Well, yeah, definitely. I mean, some of us with enough gray hair and years under a belt remember the 1980s and interest rates being 18, 19, 22%.
Oh, yeah.
In some cases. So, and this is just my estimation, it's kind of come back to normal as what, like 1%, 2%, 2.8%, that was abnormal, historically speaking, right? So
It's come
Big
back to
fives.
normal, but what's not normal is the amount of debt that
Yeah.
people have on their properties and what people paid for them. So
Mhm.
that is what has put everything, has skewed everything. We have buildings on the market at 7 million that were previously on the market literally 3 years ago at 12. Think about that.
Wow.
Think about that. That's
Yeah.
a 40 some percent drop in the asking price, and the deals still haven't transacted. So that just shows you really the state of the market we're in here.
Yeah. Well,
However,
what it shows me, Brent, is the state of the market we were in 3 years
correct.
ago
Yes, yes.
was ridiculous. Is
Hyper. We
what it
had
was.
something that may never occur again, where the economy wasn't great, but rents were super high because of COVID stimulus. And because the economy wasn't so great, interest rates had plummeted. So
Yeah.
people had money, rents were high, interest rates were low. It was like the perfect storm for mass appreciation and mass growth of value. And people bought buildings at 12 million bucks. They got a $7 million loan at 3%. Now that property is worth 7 million.
Mhm.
That interest rate is going to pop from 3% to 6.5%. And that guy is trying to figure out what
In
to do
trouble.
with that property.
Yeah. So, what are you seeing for opportunities for your clients these days?
It's really simple. Just long term, these buildings have probably hit rock bottom in value. As mentioned, the $12 million property is now selling for 7.
Mhm.
I don't see it going to 6, maybe 6.8, maybe 6.5, but it's like buying stock. Okay, if something was selling for $100 and it goes to 60, do you really care if you buy it at 55 or 62? You're still buying it so far below where the top is. It could go from 60 down to 55, but long term it's going to go back to 60, to 65, to 70, and you're going to feel like an absolute genius in 2 years or 5 years when you trade out of this asset at 9 or 10 million.
Yeah,
It could take a
it's
long
a buyer's
time.
market. Yeah,
It could
exactly.
take a long time for it to go back to 12 where the last guy bought it. But we don't need it to go back to 12 million for someone to go, this was a home run. We just
Exactly.
need it to go up a little bit and for the property and management to stabilize. It starts creating some cash flow. And then you should make money all along with cash flow. And then you'll be able to exit the property at a fabulous price, do a 1031 and something really stable and feel like a genius.
Mhm.
That's how billionaires are made.
Well, speaking of billionaires, you wrote a book called The
I
Billion Dollar
did.
Portfolio.
Yeah.
Tell us a little bit about your book.
So over the last 20 some years, my expertise here was selling apartment buildings for just these private capital owners that had bought buildings on their own or with partners, with investors, and created these massive portfolios. And people would ask me, "Oh, how did that guy Bob? How does he have so many buildings? What did he do?" And I'd be like, "Well, Bob did this, that, this, that." Well, tell us about Jim. How did he do it? Oh, Jim has an interesting story. He did this, that, this, that. And someone's like, "This is really interesting. You should write all this stuff down and write a book about it." It's like, maybe that's a good idea. So the
Yeah.
book was primarily written about all the aspirational stories of clients of mine that started out as engineers or literally I have one client who was a valet. He moved up here from Argentina. He was
Wow.
valeting cars and bought a duplex, lived in a unit, and then he bought a fourplex. And then just a crazy story. And the guy's got a couple hundred units now.
Beautiful.
But another client of mine moved here from India. He came here to get his master's degree in engineering. A guy in his class was an on-site manager at an apartment building, and he was like, "Well, you get free rent in exchange for fixing clogged toilets. Get me one of those jobs." So he got a job as an on-site manager, and then someone told him, "Hey, you could maybe get someone to sell you an apartment building and do seller financing." This is back in the '80s where people were desperate to get rid of buildings. So someone sold him a building, carried all the financing. And the guy bought it. The seller was comfortable with him because he's an on-site manager, knew how to fix things. So the seller was
Yeah.
like, "Okay, I feel comfortable with this guy." He bought that building, and then he's in his a doctor checkup, and he's bragging to the doctor about this building. The doctor's like, "I want in on that. Next time you find a deal, I'll buy it with you." So they found another deal. The doctor put all the money in, and then he started basically doing deals with this guy, brought in other people. Now the guy's the second or third largest owner of apartment buildings in Los Angeles County. Yeah. That's his story.
That's
So this is the
beautiful.
type of stuff that people want to hear about. Like,
Yeah.
if he could do it,
How many
anyone
different
could do it.
how many different stories do you have in the book?
There's got to be like 10 of them. I
Nice.
can't remember. And we had more, but you can only put so many
Yeah.
stories in there before it's like
Well, you
overwhelming.
got to have volume 2 then, right?
One was enough, but sure, maybe someday, I mean, onward, right?
Yeah.
Yeah.
So if people are interested in the book, remind us what the title is and where they can get it.
$1 billion portfolio. It's that simple. It's on Amazon. It's just 3
$1 billion
words.
portfolio, right? By
Yeah.
Brent
Brent
Sprenkle.
Sprenkle is my name.
Nice.
It pops up in there. I tried to make it an easy, fun read for people that weren't necessarily real estate professionals.
Yeah, well, it's not a how-to book so much as an inspirational kick in the butt, I would imagine.
It is kind of a how-to book, but how-to books don't work long term because they're built for one segment of the market in one general geographic area. Things are going to be different in Tampa, Florida, they are in Houston, Texas, they are in Seattle, Washington.
Mhm.
So they're going to be different everywhere. The market's always going to be different. Plus, industrial, office, retail. I mean, all these assets are going to have different styles of how you can buy them, turn them, refinance them, capitalize them, et cetera. So the trick is just finding a technique that works for you and figuring out a way to scale that business. Because after a while, you run out of your own money, right? It just naturally happens. That's the biggest challenge with commercial real estate or any real estate for that general. It requires a lot of cash. 99% financing deals don't happen. You got to come up with a lot of money. At some point, you will run out of your own cash. At that point, you need to start looking at investors of whatever type or some sort of capital from investors, and that's where things get tricky, but that's also where things get interesting, where all the money is really made, but also where the money can get lost. Like some of these buildings right now in LA that were at 12 million are now at 7. There's mezz debt on there. There's different levels of financing and someone's getting wiped out.
Yeah.
So, it is what it is.
Yeah, for sure. So Brent, as we're wrapping things up, who are you looking to connect with these days?
We're always looking for new investors. We're always looking for people that want to invest and buy apartment buildings here in Los Angeles. We're looking for sellers of apartment buildings. We do have buyers, despite the challenging market we're in. That's our primary business, helping clients buy and sell apartment buildings here in SoCal. And my specialty is Los Angeles, but I run an office here. We also sell retail, office, and industrial here also.
Very good. So Brent, if people want to connect with you, what's the best way for them to reach out?
Just shoot me an email. It's first initial B, last name Sprenkle at northmark.com, and the mark has a Q at the end. But I'm sure you can put that in the credits for this, so it makes it easy for people.
Fantastic, Brent. Well, hey, thanks so much for being on the show. This has been great.
Thank you. This was fun.
All right, everybody. Thanks for tuning in, and we will see you on the next one.
Thanks for listening to the Property Profits Podcast. If you'd like to be a guest on the show, apply at daveinterviews.com.